And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Let's not waste a minute. Take a look. As usual, we are going to go ahead and begin by sharing with you where we closed. It's been a rather eventful week. You're going to want to see how we ended as it relates to the broader markets. From there, of course, we will go ahead and take a look behind that and see where the underlying industry groups and sectors have settled for the week. And always as well, we are going to take a look at some of the more impactful headline news that drove price action this week. Quite an impressive rally taking place here. And then we are going to talk about Fed notes and low inflation. And this is exactly the opposite of, as it relates to certainly inflation, that we've been talking about here of late. So a nice potential turn in that event there. And then also building your watch list. You're going to want to know how to do that. We did get a bullish follow-through day that does in fact signal a potential bottom in the markets. So we'll talk all about that as we move forward. Here we are with some of those headline news. First up, the Federal Reserve on Wednesday, they did release their meeting notes from their prior meeting, and it was all about Fed governors, and certainly there was a sense of urgency in their desire to fight inflation. And this news was certainly a driver as it related to being very pivotal. The investors have been rather a lot in the way of uncertainty. There's been a lot of sloppiness and volatility in the markets, and they were on the lookout for something in the way of a more centered and more firm path that the FOMC may in fact take, and the Federal Reserve put that out there. So we did see a move. We'll take a look at that. Also, core inflation numbers did come out today on Friday. This is the CPE number. It is the primary metric for the Federal Reserve. They look at it very closely as it relates to inflation, and it came in lower than expected. So we're going to take a look at the impact there. Also this week, the US dollar and interest rates are continuing to pull back, and that's going to reflect in the markets as it relates to some of these industry groups. We'll get into that as well. Oil prices remain elevated. Energy, another big top performer this week. And next week, we go into a holiday shortened period. And as it relates to the economic data to be released, consumer sentiment, industrial production, and unemployment for May will all be released. So let's go ahead from here. Take a look at a daily price chart of the S&P 500. We want to see how this week's 6% rally in the S&P impacted the position of the broader markets. And right here, we can see that the RSI, that's that relative strength indicator, momentum indicator, is now in positive territory. That just occurred today. I feel as if I watched it as it evolved, but we are now in positive territory there. Also, the stochastics, this is a faster moving momentum indicator, and it did turn positive last week, and it remains in positive territory. So we have nice upward momentum taking place. Let's take a look at the position of the S&P relative to these simple moving averages. This green is your 10-day, the purple your 21, 50, and 200-day. So certainly we have been residing below and hovering around this 10-day moving average here for quite some time, this month at the very least. And this week's price action has pushed the S&P 500 above not only the 10-day, but also above this 21-day simple moving average. And that is constructive. I talked about this in my MEM Edge report last Sunday. We were in anticipation of a relief rally this week. We got that and then some. And in historical precedents, really all we were seeing more recently was a rally just above that 10-day and then pullback. This week, we're seeing more in the way of a follow through. And yesterday's price action was enough to call what we call follow-through day. This is something, if you follow my work closely, you'll know it is a system that has identified every market bottom. Now, I will have a caveat there in the sense that it does not always take hold. However, majority of the times it does. There are other characteristics that you're going to want to see in addition to the metrics needed for that follow-through day that I will talk about more in my report this weekend, but certainly we will be nibbling in on some names that are turning positive. Let's take a look at this mid-March period back here. Just to alert you, we did get a follow-through day back here, and it worked until it didn't. So let's move on from here. We're going to take a look at those 11 underlying sectors in the S&P 500. We want to get our arms around any potential rotation among these sectors and also take a look at where the relative strength is. So I've gone ahead with these 11 sectors as well as the S&P 500. This is a 2-month daily price chart view, and I've added this RSI, that's a relative strength indicator. I'm sorting it into descending order, and up here in this upper quartile are your relative outperformers, and then the lower right, your weaker areas. And this is something that I do each and every week, and it is quite powerful as it relates to pointing you toward industry groups, in this case, sectors that are moving. So let's take a look up here at these relative outperformers, and it is a bit more mixed recently than we've seen recently, is what I meant to say. In the past, over the past couple of weeks, we've seen utilities, healthcare, and energy certainly up here at the forefront as it relates to those defensive areas. Consumer staples were up here for quite some time, but we did get that significant drop last week after Walmart and Target came out with not only weak numbers, but management guided lower going forward due to inflation. And the feeling was that it would spread out to the staples area and they could eventually be impacted by inflation as well. But as mentioned, certainly today's number is encouraging in the sense that we are on the lookout for inflation to, at the very least, peak and then recede. So other areas up here in the forefront that are worth noting as it relates to moving more forward into a stronger position. Healthcare is certainly up here. This is an area that peaked in price back here in April. And more recently, it is gaining traction as it relates to overall performance. It was up only 3% relative to the S&P, up more than 6%. So we're not getting that big performance, but we are seeing certainly traction as it relates to a potential downtrend reversal. So some of the bigger movers, just to share that with you, discretionary was the top performer, but it is lagging simply because it is so depressed in the sense that it is so far off its peak in price that 1 week rally will not be enough to really begin to move this to the forefront, but it certainly is encouraging. So from here, let's go ahead and take a look at some of the sub-industry groupings, taking a look beyond those sectors. And I will share with you again this 2-month daily price chart view with that RSI. I've gone ahead and populated this list with areas that are certainly very telling as it relates to what is taking place in not only the broader markets, but my focus is growth stocks, faster moving names. So I do have that semiconductor index. I also have software, biotech, and in addition, some of these broader indexes that are really quite telling. So let's take a look here. I talked about this in the beginning. Brent crude oil is still very elevated. We are due to close the week here at about 114 per barrel. That's really high. That's, again, I talked about energy being one of the top performers this week, all about that oil price staying high. This is a very telling advance here with semiconductor stocks. They've been down and out in that lower quartile for many weeks, and it has very swiftly advanced to the number 2 position. Let's take a look at this semiconductor index here, and it was up almost 8% this week. And we can see over the last 3 days, pretty significant rally taking place. Your RSI is now up here in positive territory. That downtrend is still, unfortunately, very much in place for the semiconductor stocks. However, from here, I will share with you how you can create your watch list so that when semiconductor group turns positive, you can take advantage if you are inclined to dip into these markets. From here, another group that is up here in the forefront, these biotech stocks. Again, not an outperformer on a percent basis, but we are seeing the beginning throes of a potential downtrend reversal. RSI up there in positive territory. I will share some names there. That is one of the bright spots in healthcare, as are some of these large cap pharma stocks. So from here, let's take a look. I talked about the US dollar dipping. We can see for the second week in a row, this is the yield on that 10-year treasury dipping. And we can see it's now down at the 2.7 level. And it had reached 3%. It got as high as 3.1% back here in the beginning of May. And this receding is very constructive as it relates to the ability for these growth stocks to then come into play. And then from there, I did also want to share with you where volatility is closing. We are at about that 25, 26 level. While it is quite a bit lower than this peak in the beginning of May, it is still elevated. In normalized bullish trending markets, we want to see that volatility around that 18 level. That's the average. So 25 is still quite high. While we are seeing nice traction in the markets, we do still anticipate volatility, certainly going into next week, to remain elevated. So from here, we are going to take a brief break. Lots more to cover. We'll be right back. And we are back. I am going to begin this segment by talking about how you can begin, if you haven't already, put together a watch list so that if these markets continue to firm up, if we see a nice continuation rally, at this point in time, for me, any buying activity is going to be with a short-term time horizon in mind. I'm not quite yet convinced. We've only had 1 day, 2 days, and that a downtrend reversal or a new trend does not make. But that said, it is never too early to get that watch list going. So what I have here on this daily price chart is a look at Advanced Micro, AMD, one of those certainly better known semiconductor stocks. And here is what I am going to be on the lookout for as I begin to, I have a very robust watch list already, but here are the characteristics that I'm going to be on the lookout for. First up, AMD here does have into today's close a break back above this 50-day simple moving average. That's going to be, at the very least, the first criteria. In order for me to turn super bullish, I am going to be on the lookout for a move similar to going back to the end of the beginning of October last year, when we had this break back above each of those moving averages. You can see we were already well positioned above this 200-day, and then that allows the stock, in this case AMD, to enter into this uptrend and find support at this upward trending 10-day simple moving average. So here we are in the very beginning throes. That 10-day at the very least is in an uptrend. As it continues, if the stock continues to advance, these moving averages will as well. Ideally, we're on the lookout for this 50-day simple moving average to trend upward, because that in essence is going to give you that longer term trend outlook as it relates to a potentially longer move to the upside. So we are very much in the beginning throes, but AMD is showing signs because we do have that nice RSI up here in positive territory, MACD just entering into positive territory. The other key component here is, for me, I want to see those growth characteristics. Does AMD, do they have numbers that are going to support that? This is what I'm going to be doing over the weekend. I do have a recollection that AMD may have guided lower, but I'm going to push the shirt sleeves up and dig in and come up with those watch list names that subscribers to my MEM Edge report have access to. So from here, I did want to go ahead and share some additional stocks. I did mention to you how you can go ahead and screen for them. One of the primary characteristics is going to be a break above that 50-day. That's the real line in the sand, if I may. So here we are with Applied Material, another semiconductor stock, and we can see it's certainly not the prettiest of charts, but it does have that very first key component up above that 50. However, the moving average convergence divergence is not in positive territory yet. Again, we are going to pay attention to precedents. This is that March rally, which in turn was in fact a bear market rally. So any kind of signal, any kind of breaks back below these moving averages, take a look at the volume, that's distribution. And then we did get the outside momentum indicators turning negative, which signaled this uptrend failure. But for now, that is what I'm going to be on the lookout as it relates to my watch list. This is a screen that I ran heading into this show, so I can share with you these stocks. KLAC. Now, this has been already on my watch list, quite simply because it has been holding in remarkably well. I shared with you that semiconductor index, and it was down and out. And take a look. You would not know that the semiconductor group was under pressure. And today's move has really propelled this stock into positive position because now it's above even that longer term 200-day simple moving average. And then we have these nice outside momentum indicators that are constructive. Today's going to be tough on that volume side. It's a Friday going into a long weekend. So you are not potentially, for a lot of these names, going to get volume higher than yesterday. But I can tell just looking at this that this is high volume relative to what I'm seeing elsewhere in this group. Let's take a look at one other name that has been on my watch list. And this is ON Semiconductor. And again, we can see the dynamics going into the rally over the past 2 days as it relates to ON relative to that semiconductor index. Ugly down and out, but ON having really strong in the way of relative outperformance, holding in remarkably well, up above that 50 and up above each of those moving averages, which now in turn are trending upward. Outside momentum indicators are positive. So from here, let's go ahead. I want to move on to another industry group. I talked to you about healthcare, the fact that on a percentage basis, not really a lot to speak of this week, but the group is up there in relative outperformance. So I'm going to share with you some of the stronger names in this area. And in fact, one name that is breaking out this week, this is a stock that I have owned certainly since back here when it reversed its downtrend, held on through this pullback. But let's take a look. Today, it did experience a base breakout, and it's almost a 2-month base breakout. Big volume, outside momentum indicators are positive. Now, certainly, given the rally over the last 2 days, the stock is extended, and I would look for a pullback, but that is certainly one of the more stellar names. Most of these names I'm going to be sharing with you are large cap pharmaceutical stocks. They have been really firming up ahead of the group. This is Johnson & Johnson, gap up above these moving averages. A lot of this is due to earnings. And then in addition, management guiding estimates higher going forward, whether it's due to new drug developments or advances to their existing products. For instance, Pfizer did get FDA or European approval to administer their COVID vaccine to younger children. So that was a nice advance, anticipated growth from that. We can see the stock is poised to potentially break out of this base. A couple of other names that I can share with you that are not in that that pharma area is Thermo Fisher, TMO, a very diversified stock as it relates to medical products. They're involved in a number of different areas. And the reason I'm pointing this stock out to you is because we can see this excellent advance the stock had from July into this early 22 period. This is when growth stocks, higher multiple names, peaked in price. But the fact that the stock does have that characteristic, that ability to experience a steep outperformance relative to the broader markets, is going to, by that alone, keep it certainly in the back of my mind. But as it begins to break above these moving averages, it will make it onto my watch list. And of course, today, a big rally. We're not quite in positive territory yet. We have that positive RSI, MACD, not quite there. Again, pay attention to this rally attempt back here for any signals that TMO may not continue on. I'm going to share with you, I talked earlier about biotech names potentially in the beginning stages of reversing their downtrend. AMGN has really been on the rise here. I'm going to put up the full quote so you can see some of the characteristics that are making this particular stock attractive. Certainly among them, a 2.8% yield, and that is attractive currently in the high inflationary period. We can see that it's in a very confirmed uptrend. Outside momentum indicators are positive. So keep an eye on that, looking for a potential continuation rally. Another large biotech name here is Gilead, and we can see it's in the potentially beginning stages. Certainly further along than beginning. A break above that 200-day would be very constructive. We can see, I talked earlier about wanting to see that 50-day in an uptrend. It is taking place. And then other characteristics here, a nice 4.4% yield, trading at about 18 times its trailing four-quarter earnings. This is going to continue to be a critical piece, at least what I've seen from my screening as it relates to stocks that are doing well. There are still basic materials. I didn't talk about it, but there are still inflation fighting stocks that are outperforming this week. So that is a quick look at the healthcare area. I did want to circle back to technology because I shared with you some of those semiconductor stocks. Just going to share with you a couple of names that are in different industry groups that are making it to my, or already on my watch list. Here's Western Digital. This is a hardware company, and they came out with very strong numbers here in the beginning of May, gapped up, a nice pullback, but it only to this 21-day moving average in an otherwise very difficult market environment. We did experience a double bottom formation here with the stock, and it is now poised to break out of a nice 1-month base. Keep your eye on that one. Another stock that's in that group, and that's what I want to see. I want to see participation beyond just one initial stock in order to be constructive on the other names. I want to see a broadening out within that group. So here's Seagate Technology, another hardware company, and it's very much in the beginning stages. Quite a bit sloppier, I might add. You can see these big breaks that take place, but it's attempting to reverse its downtrend. And then we can take a look at one stock that has been a big winner over many market cycles. For my MEM Edge report, we've been able to identify most of the times when this stock comes into play. So I'm going to share with you a weekly price chart. This was a big winner for us out of this 2020 bear market. We identified it again in late 2021. Took advantage of that nice rally. So we like to see that precedence of an ability to enter into a nice healthy uptrend and outperform the broader market. So let's take a look at Adobe now, ADBE, and we are super in the beginning stages. It's just broken up above that 50-day simple moving average. We do have a positive RSI, MACD not quite positive yet, but it certainly has room to run. Your next area of upside resistance is up here at this 541. I failed to share this with you earlier, but let's take a look at the software industry group. Very similar dynamics, and this area has been really beaten down, primarily high multiple, high growth names that do not fare well when interest rates are rising and when inflation is on the rise. And it's had many downtrend reversal attempts. So still very much in the early stages, but I am certainly keeping a close eye on it because it's been a wonderful area as it relates to identifying these big outperformers, again, for that MEM Edge group. MEM Edge report that comes out twice every week. So I talked about the consumer discretionary being the highest performer. It's also been very down and out. Retailers, this is another high growth area, does not fare well, certainly when rates are high, but also those inflation levels are theoretically keeping consumers. We talked about Target, Walmart, Amazon also guided lower. And so there was a sense that consumers, as it relates to their spending habits, may be pulling back. High oil prices, high food prices. But this week we did get a significant rally. It was up 9% for the week. So I'm just going to share with you some of the stocks in the consumer discretionary area that are faring, kind of getting into their groove, if I may. So here we are with Home Depot, and this was a big winner out of the pandemic. And then we had a nice uptrend at the end of last year as well. In line with these high growth names, it did fall out of favor. But let's take a look at the current dynamics. We have broken up above the 10, 21, and now up above that 50-day simple moving average. Our RSI trending upward in positive territory. So keep an eye on this one. They did just release their earnings recently. I'm going to dig into that over the weekend and see, did they guide lower? Because I know certainly they would have supply chain and also inflationary pressures as well. Good old McDonald's, this is more of a V-shaped potential recovery here. We get that nice MACD black line up through the red. RSI up here in positive territory. This stock does provide a nice 2% yield. Let's take a look back actually at Home Depot. It also has a 2.2% yield as well to keep in mind. And then I did want to point out some of these home builders are coming back. Let's see how they look on their chart. This is D.R. Horton. And of course, lower interest rates. I talked about that 20-year trending lower is constructive for this group. So we'll see if it's enough to power these stocks a little bit higher here, but certainly, again, up above that 50-day. That's that first step that we want to see. And then, of course, we want to see broadening out beyond just one stock. This is Lennar Corp, another home construction stock that is conceivably breaking back above. We can see it's done so in the past and faltered, but certainly worth noting because of that move that we have seen this week into some of these stocks. Let's take a look at Tesla because that was up quite a bit, 14% this week. Here we are with that downtrend reversal. And with these stocks, I may run out of time, but you will want to look at an intra-day 1-hour price chart to see what may be taking place. Here we are in that super 60-minute short-term chart. We can see it's trading up above these moving averages, a little bit overbought, but your outside momentum indicators are constructive. Everyone have a great long weekend. If you haven't already, take a trial of my MEM Edge report at a very nominal fee. There's a link below. You'll have access to my current watch list. This week, we're going to examine the markets closely, take a look at some of these names, see if they can move from the watch list to my buy list. And also, I do have existing stocks on that buy list that are really tearing it up. So again, have a great weekend, and I'll see everyone here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.